What is PMI? PMI is short for Private Mortgage Insurance, the most hated insurance in the world. Bing and MSN did a survey of all the different insurances, and PMI came out as the most hated. The reason: you are not the recipient of the premium nor the benefactor of the policy. Your lender is. It actually hurts you to have it. They can foreclose on your house faster if you have PMI than if you don't. PMI is a hidden insurance that lenders require low down payment borrowers to take out. The insurance protects the lender, not the borrower, against default. Premiums are typically $65 to $100 a month or more. The average term of most PMI policies is 17 years. Get this, 14 years longer than is necessary. Private mortgage insurance has nothing to do with life or disability coverage. You'd be surprised how many people think that it has insurance for proceeds to their family. In fact, a policy is never issued to you. To qualify to drop PMI, you must have at least 20% equity. Contrary to what your lender may want you to believe, appraisals are not necessarily required. It's easier if you have one, but they're not necessarily required. Alternatives to mortgage appraisals. As stated by the Mortgage Insurance Companies of America, MICA, the Private Mortgage Insurance Association, your lender must be satisfied that the property value has not declined. There are a myriad of ways you can prove to your lender, such as before and after pictures, newspaper clippings, internet findings that show that not only has your property not gone down in value, yet has appreciated. Your home value. Understanding what your house is worth can help you remove PMI. What makes property values? When you bought your home, you bought it for its inherent value. Inherent value is what attracted you to your new home, i.e. architecture, quality of construction, square footage, landscaping, etc. Yet property values or market values depend on many other factors. Direct factors: efficient utilities, adequate resources, and a thriving business district usually translates into healthy property values. Improvement, sweat equity, before and after pictures with receipts of work done. Appreciation equity. Current tax appraisals are your best bet. However, sales of comparable homes in your area may be satisfactory. Neighborhood. Low crime rates, no boarded up homes, attractive, well-kept properties are the key. Schools. Proximity to good schools raise values of real property. Amenities. Close proximity to parks, bike paths, libraries, shopping centers, hospitals, fire, police, convenience stores enhance the value. Transportation. Whether it's public transportation near an exit to a freeway or close to a thoroughway may be a plus. Indirect factors. A rising economy lifts most real estate prices and boosts sales. Demographic changes. As more new jobs in the area open up, demand for housing subsequently follows suit, driving prices up. Comparable sales prices. The most reliable indicators of current market value are pending and closed sales within the last 6 months of properties similar to yours. Market conditions. Find out how long recently sold comparable properties were on the market before they sold. The shorter the time frame, the higher the perceived value. Square footage. Use square footage to compare your price against comparable listings and recent sales. For example, if you have 2,000 square feet and you estimate your property value is $200,000, that is $100 a square foot. How much per square foot have nearby properties sold for? Land. The size and location of your lot may play a vital role in pricing your property. A corner view lot goes for a lot more than a middle of the block lot. Features. An extra bathtub, solar, RV parking, extra storage will drive the value up. It takes a phone call, a letter, and sometimes, but not always, an appraisal, says Scott Vitek of F&M Bank and Trust, Tulsa Times. If your lender still requires an appraisal, you may want to suggest that you will refinance with another lender if your current lender will not work with you. Andrew Jacob, President, Worldwide Financial Money Magazine. If you like what you've seen, hit the thumbs up button and be sure to subscribe if you'd like to see more of this content. Thank you very much for viewing.